Hello traders, Gary Wagner here. Just about 8 o'clock in Honolulu, 1 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is December the 11th, 2015, and this is the Daily Report for Gold and Silver. We do have precious metals complex mix becoming well off their lows and now trading higher on the day. Gold currently up about $4 on the day at $10.75 and change. Now overseas trading took it to a low of $10.62.63. High $10.78.98, so call it $10.79, and we're just a couple of dollars, about $4 off of the highs of the day. When we look at some of the other markets, such as silver, for example, we have silver trading lower this morning, and that's trading under pretty dramatic pressure, down about 18 cents on the day at $13.92, the low $13.78. So you can see this market has really come back, but come back after trading dramatically lower on the day. The high $14.15, and we're nowhere near that. We're much closer to, obviously, the low on the day. Palladium also trading lower. That's trading off $10 at $8.45. Excuse me, platinum. And lastly, palladium is up at $5.45, up $2.75 on the day. Traders, so in as much as gold is trading higher on the day, absolutely no doubt about that, up about $4.40 currently. It's really dollar weakness that has given gold its biggest boost. For example, normal trading only accounts for about 75 cents of today's rise, at another $3.65 to get your net change on gold. And that's all due, as I said, to a lower dollar. You can see that here on our weekly chart. So in terms of the markets as a whole, although the precious metals have some action in them, the real action has been in the U.S. equities markets and then oil. Oil has had a tremendous plunge. We'll look at that in a second. Dow Jones Industrial Average off almost 300 points on the day. Standard & Poor's also faring lower. They're trading down about 34 points on the day. And of course, we'll cover that in detail on trending markets in a little bit, but take a look at oil, $35.73. It is off over $1 a barrel, down almost 3% on the day. When you look at this weekly chart, that really tells you the tell of the tape. It's broken below any of the most recent lows that we've had. You can see this low right here at around $37.76, and the market has just barreled all the way through that. Absolutely a glut of oil on the market, but putting a lot of other markets under pressure, the commodity complex as a whole, as well as U.S. equities. So traders, as we go into the close of trading today, and we still have quite a few hours left in trading, but we are trading back near the highs in gold, trading at around 1076. This, of course, is a very, very short-term 1-hour Japanese average chart. And really what we can see in this chart is the tremendous momentum that came in when this market hit these lows. Of course, this is the beginning of our trading day right here. This would be the beginning of the 11th. Market comes in, as I said, overseas. It did trade lower, traded to these lows at around 62. And then as it opened, you can see that we had a large green candle here, but we still had wicks on them, upper and lower wicks. We started to lose the lower wicks, which means that we were in a defined uptrend. But you can also see that candle size has diminished as this trading day has progressed. So even though we are trading up near the highs, the strength or momentum behind this most recent move does seem to be dwindling a little bit. And I've gone ahead and returned us to a daily chart, and this daily chart is in standard candlestick format. You can see we're trading up around 1076. Now, of course, we are short at 1078. We also have stops in the market at 1088, just above these highs, so it's above 1088 right in here. With the FOMC meeting scheduled to kick off next week, there's not a way that I'm looking to put on any kind of new positions. If anything, we'll look to wind things down. We will maintain our short gold position because I do believe that if rate hikes are implemented, then we should see some bullish sentiment come into the US dollar, and that bullish sentiment in the dollar, of course, would correlate to negative sentiment in gold. And so that's one of the reasons that I have been staying short this market. We're going to keep our stop right where it is. Our risk factor on this trade is only about $10. And you can see that we did make this lower low today. So we'll have to see what happens over the weekend, of course, and coming into next week. But my recommendation is absolutely to maintain our current short position and also to maintain our current stop. Lastly, I did want to take a look at silver. And as I said, silver's trading off about 17 cents on the day. The true story is it's off about 25, 26 cents when you factor in dollar weakness. Now, one of the things that we noticed in this market, and take a look at this 240-minute chart. So each candlestick represents 4 hours. But look at the low that it hit right in here at 1375. Compare that to the high above 14, and you can see a tremendous swing or a tremendous range in the day. We do absolutely have volatility increasing as we go into the FOMC meeting. 1, 2, with the current price of oil pressuring the entire commodity complex, and we also have a weakening US dollar. So I think that we're getting some real strong action. We'll have to see how that develops, of course, next week. But for the meantime, as I said, we'll maintain our current short in gold, maintain our current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.